All right, welcome back. It's almost like we were wishing our own demise, right? You hear that constant drone of worry from all corners of the mainstream and social media. I feel like the market is thinking this rally was too good to be true. Let's take it lower. I don't know. We're almost wishing bad things to happen to ourselves. But if you take a step back, like Adam just did, and things aren't really as bad or as worrisome as some would like you to think, right? Rates look to be trending lower. Earnings have been great, all right? That one big, beautiful bill, that's going to start to get some good traction in early 2026. So is this tech rally really running out of steam? Or is this just a case of our imaginations being our own worst enemy? Now let's get the thoughts of our next guest. He's been a bull. Please welcome to the show, Mr. Eddie Ghabour. Eddie, thanks for coming on. I think that we're kindred spirits. Both of our portfolios are suffering the same ills today. Which is okay, and we just had Adam Johnson on talking about it as well. 3 or 4 days does not make a year. I also think that I'm still very bullish on AI. The markets are allowed to go down, that's fine. Take advantage of it, buy more. But the last thing I would do is be selling on the lows. What say you?
I agree. I mean, look, we've been spoiled as investors that we haven't really had that gut-wrenching correction that you see in every bull market cycle since the spring. And so we've been so used to just kind of coasting along that you get a 1 or 2% correction and it gets bought back up and make new highs. And so you get one here where you're getting a lot of weak hands shaken out of the market. And I have to tell you, I'm glad this is happening, because the biggest concern I have as a bull is to get in this euphoric state where everybody is complacent. And that's usually when that shoe drops and you lose a lot of money and you turn into a bear market. So we've now seen the VIX in the 20s last month and this month. You're starting to see the bears come out of hibernation even more and more now. And that's setting up really well for a Santa Claus rally. So I think volatility is going to stay high this month. You've got NVIDIA earnings next week, which could be a positive catalyst. You've got the Fed at the beginning of December. So I think you have to stay put with your process and buy these dips if you've got the risk tolerance. Because I think when we look first quarter next year, at the end of the first quarter next year, we're going to be very, very happy that we own what we own.
Yeah, I'm in that boat with you, and I'm not going to try to be a cheerleader. You just have to say this is what happens in a big boy market, right? I mean, you got to take the good with the bad, and stocks are allowed to go down. I know a lot of people don't think that's the case, but yeah, they do sometimes go lower. And since April the 2nd, I need to remind everybody that was the Liberation Day, or maybe even April the 8th when we were on our lows. The market's been up, the Dow's up 14%, not including today, obviously. The S&P is up 20, and we got the NASDAQ up 31. So to your point, this is not a bad thing. We can have a little bit of a retrenchment. We can get out some of these weak longs and the way the market can go. And by the way, I am not trying to be a cheerleader because I want the market to go up just because. I still feel like these tech companies that we were talking about, over the break, like NVIDIA that's got earnings next week, they're making a ton of money. This isn't the year 2000 all over again. That's 25 years ago when it was all about clicks, eyeballs, and .com. These people are actually making money. Yeah. Have they spent a lot of money when it comes to AI? Well, we'll get some of that. There's allowed to be a little bit of nerves about what the return on capital will be with that. But still, what it's doing to the market right now, I think, has been fantastic. Artificial intelligence is here to stay. These robots are going to be coming on board. I love Elon Musk's thoughts about those as well. So I'm still really excited. But this is okay. These types of things happen, and away we go. What say you?
Yeah, I think it's important to understand, like people like us, I am not a perma bull. I look at things objectively, and there have been times when I've been as bearish as you can possibly be. But when you look at the underlying dynamics, you look at AI, you look at earnings growth, we're seeing earnings growth we haven't seen in years. You couple that with the fact that you've got energy prices coming down, which is going to be a tailwind to the consumer. You have Fed stopping QT next month. You're going to have rate cuts, a new head Fed chair announced, going into a cycle where the economy is going to start to reaccelerate into the first quarter. So you can't ask for a better setup than that as a bull. Doesn't mean you're not going to have speed bumps along the way. But if the fundamentals continue to strengthen and you get these dips, to me, it's just an early Christmas gift. Now, if the things start to flip in the other direction, that's when you need to sell, raise cash, and play defense. I just don't think this is the start of that bear market, nor the top of the tech trade.
What would have to flip in the other direction to make you think like that? What would you be looking at for something like that?
So, a few things. First thing is the rate of change of earnings growth and expectations of guidance. You start to see guidance numbers come down and growth on a rate of change start to decelerate. That's a problem. If that happens in conjunction with deceleration of growth economically, as well as those names breaking the 50-day moving average, you get those three things happening at the same time, you are probably going to head into a bear market. And this next bear market that we will have will be very ugly, in my opinion, for these real frothy companies, because there are companies out there trading at really high valuations that aren't making any money. But we're not seeing those things happen right now. So right now, the rate of change directionally is heading in the right direction on all three fronts. Now, we have had some names break the 50-day moving average here today, so we'll have to see. Those could be bounced right back up in a week.
Yeah, I mean, and to your point, we just had Adam Johnson on talking about, you can get some real good, like NVIDIA, it's trading 30 times, trading at 30 times, but then you can see it's growing at 75%, their revenue. So, I mean, there are some great deals still even to be had as these markets kind of come in. You just have to have your powder dry. And it's really perverse in this business. When things get a little dicey, people run for the hills rather than buy those new stocks on sale like they would if it was a shirt at Macy's or a car on a car lot. Things go on sale outside of stock market, people want to buy them up. They want to buy more than one. But when it's stocks and the stocks go on sale, for some reason, psychologically speaking, people want to sell and run for the hills, right?
Yeah, the name of the game is buy low, sell high, but a lot of people do the opposite. It takes a lot of discipline to stay focused on the data. If you stay data driven and focus on the numbers like the ones I just shared, it takes all the emotion out of whether you should buy or sell and makes it a lot easier. And so the other thing to remember is these options market, these zero dated options are causing a lot of higher volatility. So these names can go up just as fast as they went down.
All right, brother. Love having you on. We can't wait to see you next week. Thank you very much for your insight. Eddie Ghabour, Lewis, Delaware.